We're going to now move into our last segment here for our first show of the week, and that's our commodity corner. And Mark, I intentionally wanted you to hold your gold analysis today because I know that breakout caught everybody's attention at Tackle Trading, at least. It should have, and it obviously is going to catch your attention right there as a commodity trader. Mark, what do you got for commodity corner today?
Yeah, well, we're going to talk about gold, and we're going to talk about gold in depth. Now, gold is a area of the market. Now, we're not necessarily gold bugs, but we are. I mean, how would you describe? How would you self-identify you guys' view of gold from a fundamental, big picture standpoint? I'm very anti-fiat. I'm very have real assets. As a part of a general approach to your portfolio and your retirement. I mean, how do you like? Because I want to
usually when somebody calls me a gold bug, I call them fiat whore. So
that is a soundbite. And so like along the way with gold, whenever you have these downtrends, we say things like the fundamentals haven't changed. The fundamentals haven't changed. The fundamentals haven't changed. Whether you're in a 6-month consolidation pattern or in a short-term downtrend, and those fundamentals tied around gold, it's a long conversation, but long story short, listen, governments spend a lot of money. That's not going to change anytime soon. There is while not on the precipice, for me, there's always a risk to stability in monetary systems. And so for me, holding of gold as a percentage in my portfolio is always going to be a constant. Like I might with any real assets that I determine fit my needs in that area. But the fundamentals behind gold haven't changed for a while. Now, short-term price action can change. And so one of the tricks as a trader is to try to identify when on something you love, when you should increase allocation. And, here on the halftime report, on the commodity report, going back the last 2 months now, we've been talking about, the reversal pattern, the characteristics that started in March, and pounding that, because when you have something you love, when you have something that you want part of your portfolio, and I don't care if it's a speculative growth stock or if it's Apple or if it's gold or whatever it is, you have a thesis and you have the fundamentals and you have your belief in it and all of that. But you want to use technical analysis. And this is from an investing standpoint, not from a trading. That's a separate. We'll get to that in a second. You want to use technical analysis to help you decide when do you increase exposure? How do you manage covered calls if you are cash flowing it? How do you manage your existing positions? How do you increase those positions? And over the last 2 months, I mean, we have been all over this technical reversal, and it doesn't always play out. Listen, we're not prophetic. We don't bat 100%, but when we see opportunities and we see them develop on the charts, we start talking a lot about them, and Matt's analysis and everybody talking on tackle. We've been all over this at Tackle Trading on this reversal of gold, and it's played out pretty beautifully. It's played out pretty textbook. In fact, this reversal on the double bottom at a known support level and the price action it's one of those that you will reference in example 6 months, a year, 2 years from now. It's been pretty classic, actually. It's been a pretty classic textbook reversal. And so along the way, you've had decisions to make, right? Where do you add? When do you roll calls? And some weeks there haven't been any decisions. It's been a lot of the same, a lot of the same, a lot of the same. Well, we're now hitting another decision point, because along the way in reversals, you will get new bullish signals. That's just a constant. You'll come against support levels, resistance levels, new resistance levels will form. You're pressing up against the 200-day moving average and the 50 weekly. The 50 weekly slapped it down a couple of times. You form short-term resistance and you're breaking out. And in these decision points that you have in a reversal, you have decisions because, decision points, you have decisions. Of course you do, right? And those decisions relate to, all right, if I have zero exposure, do I add? And once again, this is from an investing standpoint. If I have existing exposure, but I have more to allocate. Is this a time to add? If I have covered calls, how fast am I rolling them, and what's my plan? And so along the way on a reversal, and this could apply to a lot of different setups, could apply to a strong trend, but we're talking in context of reversal on something you love, you will have decision points along the way. And you're having one of those decision points today. You are having a technical breakout, and not just of resistance, but of key moving averages along the way. And not only are you having that, you got some room to run on gold now. And so this is one of those, like some weeks, and one of the things I love about commodities, I don't have to make decisions every day. I don't have to make decisions every week. Sometimes I don't have to make decisions every month because of the grindy, sideways, trendy nature of commodities. I got to make decisions today. And people with gold have to make decisions today. And if they're covered, they have to decide how they're going to manage that. If they want to add exposure, what is the precision entry point that they're going to do? Are they going to ignore it and hope that it pulls back a little bit before taking up? But decisions need to be made and a plan needs to be made. And so I thought on Commodity Corner this week, it was it's a no-brainer for me. It's like, we're talking gold today, right? It's a decision day on gold. And so, like, Matt and Tim, what decisions do you think investors, and I want to talk about two types, one that don't have gold exposure to long-term investments, what should they be looking at potentially on a day like today? And individuals with existing exposure, is this a add exposure day, roll call day, and how should they approach it from that? And what else should they be looking for in this situation?
Okay, so are we assuming they own gold, the raw precious metal,
There's two types,
or
because
GLD
there's
or
individuals
GDX?
that do not, but gold trading instruments, right? GLD, GDX,
paper, right?
Yes, we're talking paper assets.
For the long-term investors, they're not doing covered calls on this type of price movement. They're opening up the risk graph.
Yeah.
And quite frankly, they've been opening up the risk graph. It's not today where they finally say, let's open it up. Like, they've been rolling here, and today they're just like, well, we're not even going to do it anymore.
Correct.
Just walk the stairs. Just walk the stairs. As long as you're walking the stairs, who cares?
I loved that imagery, by the way, as you were drawing that. I mean, because even if you're
you like my 5% upward movements in price followed by 2.5% correction.
That's right.
You like that?
The stair step.
All I'm saying is gold's at 1950 by July 5th. That's all I'm saying.
Happy 4th of July. Let the freedom fly, or whatever we were saying that one week. Couple questions there, Mark, that you had. Let's pin them down one at a time. People who don't have gold exposure should build a plan for gold exposure, one way or the other. You asked me, how do we describe our interest in gold? I mean, gold is the number one hedge against inflationary risk and fiat currency.
Physical
risk.
Gold is not paper gold.
Correct.
Paper gold has way too many other forms of analysis in it. And a lot of the inflationary concerns drive stock prices up. It actually is a negative to the digital price. Physical gold ownership is the protection against inflation.
And so if somebody has zero exposure, Matt, would you say, hey, you got to start talking to somebody about physical?
If somebody doesn't have any physical gold exposure, I would say go down to the coin shop and have some fun today.
At least have a conversation, right? Give Peter
Go
a call
meet the gals and dudes down at the coin shop. They're always fun people to talk about, and go slap some of that fiat cash down on the nice little glass table and say, give me some gold. It's fun. Or if you want to dip your toe in, give me some silver eagles. Just do it.
Marky?
I mean, the big question on my head right now, because obviously price stability's been here for a while on gold. What's our chances of a significant run up on gold here? And what would be the catalyst to create that?
Well, you have the catalyst. It's happened from around the world. But I guess I would have to know what you mean by significant price appreciation, because I don't analyze gold that way.
Well, I mean,
if you do go with significant price appreciation in the short term, I'm going to hate it.
I mean, because we have seen in markets in the last year,
You
things
don't
get
want what you're
wild.
asking for.
I'm not asking for anything. I'm trying to analyze what could possibly happen and how would you manage that if it did.
I don't know. Gold's usually not that instrument, so I'm not going to worry about it repeating the parabolic movement. If it happens, I'll analyze it in the real time. But gold is not that instrument historically, so I don't worry about that honestly.
All right, from a trading point of view, let's say you're looking to position trade. What instrument would you trade here?
Well, the investor class, they don't care about parabolic movements though. Like if you're investing in gold because you want to make some quick money and get rich, like wrong instrument.
Wrong instrument, wrong approach. I agree with that.
Wrong asset class. Wrong. You're not in the zone. You're not in the ballpark. You're not in the same country.
Mm-hmm.
So, like the investor class, they're looking at this type of price movement outside the 200-day moving average, and they're adding to.
Mm-hmm.
That's what they're doing. They've been scaling in the entire time on every technical trigger. The fundamental backdrop is there. What the Fed has been doing and the government's been doing, I mean, that's the fundamental backdrop. Now you're just riding that. You're just walking the stairs up. And so on technical movements, yeah, you're adding to whatever your max position is.
So how are you adding? Like, I mean,
You click the buy button.
The assumption would be you're not fully invested, Mark. So on breakouts, as you're building a position, I mean, think about it. The pivot points over the last couple of months, as they were developing, that's as you would have started to build that position. Now that you're getting more technical clarity, whatever that max position size is, you're going to continue to.
The investor class isn't waking up today and being like, oh, what about gold? Like the investor class in gold is in gold already, and they've been adding to the position. They were covering it the entire time. And they've been uncovering and adding as it's been building in consistency. And so I just don't have a lot to add other than what I've always said about gold.
Yeah.
From the investor perspective.
And to go on that point, by the way, Matt, the last 2 months, I have been uncovering all of my gold holdings, which I had been covering there for quite some time. So Mark, I actually don't have cover calls on it right now on my GDX or GLD positions.
So if you don't have any exposure right now, and you're looking at this breakout, you're looking at this situation, and let's say you're not in the investor class, you're in the I've been ignoring gold class, and I think most people fit in that, to be honest. Not as
so
much.
We're waking them up to be an investor in gold.
Listen,
we don't short-term trade gold.
A lot of people take some time, but even when you don't short-term trade gold, there are entry points. There are points where you have to look at where you're like, things could take off here.
Well, and a no sell day on a breakout of major resistance would be a trigger.
You know, I would dare say most people don't have exposure to gold.
I guess what I'm trying to understand is what are we trying to say here? Like, is this a trigger? The answer is obvious. Yes.
I think that the answer to many of your questions, Mark, is do not overthink the short-term decision-making of what you're supposed to do with a long-term product. You know, if you don't have exposure yet, you need to build a plan around how to build that exposure.
Wonderful point, Jim. Wonderful point.
If you're a covered call trader and a covered call, investor type who's doing that in the IRA, like on GDX, for example, GDX has had an incredible run. It's up even way more than gold is today because the miners, Matt, they're going to move faster with more volatility than the underlying raw product is. GDX, this developing trend, I mean, that's not a cover call chart right there.
No, GDX has momentum behind it, and it's had it for a while now.
That's right.
So I don't know if you're still covered. I think you're probably saying it's time to uncover.
Mm-hmm.
And I do think traders have been saying that for the last month, quite frankly. But yeah, I would say that's just a question for the trader, though, if they feel like they need to cover something, because they'd cover it for a variety of reasons.
Correct.
At a variety of delta points. So I think that in general, the conversation for cover call people in GDX and whatnot is, as long as this trend stays intact with a similar momentum, there's no reason to cover it yet.
Mm-hmm.
If you had zero exposure today, let's say you're a new trader, $50,000 account, somewhere in that range. You have zero exposure.
If you have zero exposure to gold and you've never traded gold, I would recommend virtually trading it until you do get exposure and experience.
Yeah, don't chase on a 4% update on the index there, on the miners.
Like I'm not going to wake up today and tell people what to do, Mark, when I analyze gold every day in the halftime report. It's just,
Mm-hmm.
it's not my job to tell people what to do with their accounts. I'll
Fair enough.
analyze.
Yeah, same thing on the cover call conversation. You know, whether somebody wants to cover or not, you could get different answers to that question. Me personally, I'm uncovered in the gold markets currently.
I think because of the consistency of the short-term movements in gold, it has been very consistent in my opinion. I don't think this is an instrument at this point you want to lock down the price appreciation. I think it's one you want to open up and allow price appreciation here.
No, and that's what I want to hear. That's on the perspectives of what you do, what you would do. I mean, because
But I don't think today changes that for me though, because that was done on the reversal.
Mm-hmm.
Like I didn't need to finally see the 200-day moving average and it go up, 20% before I'm like, oh wow, covered calls aren't great here. It's maintained every support level and it's broken out of every resistance level.
Mm-hmm.
So if today's finally that day that says, yeah, it's time to leave this uncovered, yeah, that's fine, right? There's nothing wrong with that.
That's a great point. No, I want to go on that because that's a great point. You shouldn't be waking up today and being like, oh, gold, look at gold. You should have been analyzing this and thinking through it over the last 2 months, right? And starting to craft a thesis. This is the fruit of the labor that the chart has been putting in over the last 2 months.
I like that saying.
Does this wake people up to the opportunity in the gold market right now? I hope so. I mean, we are talking about a no-sell day on a breakout of major resistance levels at this point in a very consistent area of the market. I certainly see, trades in the digital areas of the gold market, like, gold miners or, GDX or whatnot, that are more actively tradable instruments there. But specifically on GLD, yeah, I don't think you needed today to wake up to uncover that cover call. That analysis was building on that breakout, on that support level, I mean, even on Friday, Mark, Tim asked me, yeah, you could get a few weeks of consolidation here before the breakout. What did I say? No, you're not.
You didn't think it was going to happen.
I literally said, no, you're not.
Well, you didn't know it was going to be Monday, though.
I didn't know it was going to be Monday, but
No,
I didn't.
did.
I was thinking next week.
Yeah.
like when you're anticipating that, you're not thinking about covering something.
Dude, gold's an old man. He's not supposed to move fast. All right. He's like my buddy Max, he's not supposed to break out every Monday morning, Matt.
And again, long-term analysis, like when you're talking about covered calls, the biggest question a lot of people are going to have is not the management to the downside. Once you really master covered calls, downside movement in price is actually, sometimes you're looking at it like, thank goodness. I don't need to make a management decision. I can just cash flow on it. Sideways consolidation trends are so easy to manage in covered calls. The biggest question that people have in covered call management on any instrument is when to leave that uncovered, right? When to leave that uncovered. And what I always tell people is, in making that decision to leave a longer term investment uncovered in the short term, I always treat technically. And I go back to my step system type technical analysis, and I analyze the quality of the technical analysis, support, trends, patterns, that breakout. I treat it technically. And when you're looking at a high base scenario with a momentum trigger of a 9 EMA, that is a step system swing trading type analysis setup. And typically speaking, in those types of environments, you don't want to be covered. You want to make that decision. And Mark, so instead of making the decision, I'm going to swing trade, no, that decision is made in the same capacity, but it's made in the sense that I'm going to allow price appreciation on my investment, and I'm not going to lock that risk graph down. And so to me, it really is a similar analysis in leaving something uncovered versus a trigger on a swing trade. And when you're in an environment where you have good analysis in the short term on price appreciation, I do think it's important to leave those things uncovered in that moment and to allow price appreciation to happen. It's like what I tell Greg when Greg comes in, he's like, should I wait for that 12-cent dividend? I'm like, you just got $2 on a breakout. What are we talking about?
You already got paid.
You really want the tip?
Yeah.
Like you just want that $1 tip? Really? You got the money. Good. Don't save for the dividend. And so, yeah, long-term gold is going to be such a good instrument in your portfolio. I do, think it plays a very valuable, thing in your portfolio. It does so much in protecting against volatility, protecting against the downside. But what I wouldn't suggest is it's a great inflationary digital asset. I don't believe it's a great inflationary digital asset. I feel it's number one, protection against physical currency, against fiat risk. But I don't believe it's the best inflationary asset. I would tell stocks are better inflationary assets than digital gold is.
Interesting. Yeah, that's interesting. That'd be a good conversation for the podcast at some point as well, by the way.
Inflation drives the dollar up, which drives gold down, guys. Inflation drives stocks up, which puts a ceiling on gold analysis.
Mm-hmm.
So it's just, I know it's weird, but when you get into the gold analysis, it's just, there is a difference in physical versus digital.
Mm-hmm.
I mean, I view gold as like, a currency risk hedge,
100%. It's against the fiat nightmare scenarios.
Like inflationary. I mean, I've shared inflationary data in the commodity report last 6 months. There's like copper, oil.
Better inflationary.
I mean, there's so many commodities. Gold,
natural gas, better inflationary. Lumber, better inflationary. Orange juice, food prices, better inflationary analysis. But it's just not gold. And I know it's weird because gold should be inflationary asset class, but that drives interest rates, and interest rates drive the dollar, and the dollar drives gold far more than the national conversation on inflation does.
Gotcha. Listen, it's obviously the product we got to highlight here today. Gold breaking out of this, moving average as well as resistance and the upward mobility, and the miners are up almost 4%. It's a beautiful bit of analysis. I enjoyed the conversation here because I think it clarifies some of the thinking that should be around a product like this. And I think anybody out there who is brand new to the gold markets and never done anything with it, like Matt said a little bit earlier.
Listen, if you're brand new to any market, gold shouldn't be your first trade.
Yeah. That's right.
It just shouldn't. It's too complicated of an analysis, quite frankly.
Mm-hmm. Any last thoughts you guys
don't get me wrong. It's my favorite analysis. I love gold analysis. I geek out on it. I'll dive into the research of it, but it's a complicated analysis, quite frankly.
They are correlated, but gold or the dollar is your favorite analysis. I don't know. I might push you on that. You love talking currency markets and the dollar.
The dollar analysis just allows my little brain to geek out on anti-central bank stuff.
That's right. Which there's a lot of that.
Maybe Tackle Train didn't know I was anti-central bank.
I think
we got that part. Picked up on that.
Has anybody ever? Okay, I thought I hid that pretty well.
Any last thoughts here on gold, guys?
Again, I just want to come back. If the conversation is on to when to cover and when to not to cover, I do think, pro tip here, treating it technically like you would a swing trade allows you to make that decision to cover versus uncover from a technical perspective and not from an emotional perspective.
And I think that advice applies on gold and everything else.
Everything.
The situation.
Right. But this situation specifically. And then the second thing is, for those of you that are fairly new to the commodity market and want interest in the commodity market, gold is such a wonderful instrument for so many different reasons. It's just not the inflationary one you want it to be. Everybody wants gold to be the inflationary protection mechanism in the market, but it's just not the best one. The physical gold ownership is a currency hedge. Currency can be inflationary as well, but it's more of a fiat currency hedge than it is an inflationary hedge.
Mm-hmm. Yeah. And we've got many stories from history around that, by the way, not just.
But those stories aren't the inflationary stories. They're only tied around inflation with the death of currency. It is the death of currency that makes the physical ownership so valuable.
Mm-hmm. Yeah. Making me think of my man I knew from Vietnam who had to use gold to get out of the country at one point in the 1960s.
Wouldn't be the only man in Vietnam or anywhere else, quite frankly.
I had to do that, yeah. All right, guys, that's, always enjoy conversation about gold. Commodity Corner, we do it each and every Monday, but that's going to be our show. We're going to start wrapping this thing up and, getting final thoughts and, anything from Matt there. And I do like those.
I'm tempted to keep it on, Tim. It's how trend analysis works, right? You go set a higher high, retrace to the higher low. Set a higher high, retrace to the higher low. And when you're looking at this, my boxes were based on this historical volatility, but that's the trend line you want to see here. You do not want to see this.
No, it's unsustainable.
It just can't be sustained, and it'll get just blown out of the water. This is sustainable price action. And right now, it's very consistent, and you got to love it. I mean, this breakout, whether or not, surely the long-term investors are in celebratory mood right now because of what's been going on over the course of the last couple months. But new traders, absolutely, this breakout should put it on the radar, Mark.
All I want to do is say Matt's boxes bring all the boys to the chart. Some version of the milkshake. Matt's boxes bring all the boys to the chart.
See, I was tempted to leave them on, Tim. I was tempted. Mark took that away.
He just he had to ruin it. This is why we can't have nice things, Mark.
Can't have great things.
This is what it is. All right, let's start wrapping this one up here on a Monday. We got to